Good morning, everyone, and welcome to the Ninjacators Morning Bell with me, Richard. Right, guys, Friday, near the end of the week for some. On the economic calendar today, right about now, it's core PCE price index figures month on month. I don't think that's going to have any impact on the markets. Everyone's been waiting for what Fed Chair Powell will probably be saying with regards to their planned interest rate hikes. And this is at the Jackson Hole Symposium. Today, the second day. I think they conclude tomorrow. Tomorrow, Saturday, being the last day. So, yeah, apparently that is what all the fuss is about. Everyone's trying to figure out if they're going to be more hawkish or dovish about their rate hike stances. So, interesting to see what happens during this time frame. Probably take a while to see any reactions in the market. But anyway, something to keep an eye on. Right, that being said, quickly, let's look at the markets we're currently following. Yes, NQ, crude oil, and gold as usual. And guys, while I'm doing the analysis, if you've got any questions, please feel free to drop them there into the chat box. I'll be happy to reply to them as best I can. All right, I won't go into much historically, but for those who are new to this channel, we've been looking at this being the potential low in the years and the NQ similar sort of price action after a corrective move. I say potentially, there's still something that needs to be will happen. In my opinion, we'll see if that does happen or occur. Maybe even as close as soon as today, we'll have a better idea of whether we're on the right track here with analysis or not. So yeah, just a quick thing, price moved into a median line, found support, and has since bound higher. We also had other median lines or confluence of median lines from different angles, as I like to call it. Measure a pitchfork from that high to this low to that high over there, and I must just find that high properly. Bear with me. Yeah. Price reached this low red warning line. So with confluence of a downward sloping pitchfork and confluence of a center median line of a longer term pitchfork, right at the area price reached, and price has since moved back to the upside. We've seen at this recent highs, since the strong decline, we've seen that price reached another angular resistance line, which is this dotted one on the upside. I call it the upper 50% dashed median line. We also have the same angled line, which acts as support here, now acts as resistance over here. So we had this resistance zone that we expected a potential decline to happen from, and that has occurred. Okay, and since then, we've been saying that price might potentially move back into a support zone that we identified, the bottom sort of area of that support zone being at 4,084 and a quarter. And the upper sort of limit, 4,160, plus minus, okay? So price moved back into this low, or into the support zone, sorry, and has since bounced back to the upside. We also had a high volume area on the volume profile to measure this previous move to the downside, which the support zone encapsulates. You see this like high volume area here. We've also got a lower value area, which are these blue lines, okay? So price came excruciating close to the lower value area. It came into this high volume node and has since moved back to the upside. Now, there's still a few things that need to happen here from a price action perspective, or should we say price structure perspective. And what I mean by that is that generally when you have a new trending market, for example, let's just draw that for you so you can see what I mean. Or the start of a new move that potentially take prices in this instance is both the ES and NQ. We'll look at the NQ in just a minute. To new highs, you want to see a 5-wave behavior, followed by a corrective move, whether it's a complex or simple correction move, and then expect a very strong impulsive third wave to the upside. So you would label that, you would say something like first wave higher, second wave lower as corrective, and then I don't know if this is actually going to draw this now. No, it doesn't. Let me just move things lower. Sorry for that. First phase bull, corrective second, and then you build up in a third and fourth and fifth wave. in a larger scale. So in the smaller scale here, we are under the assumption, or I am, let's get this labeling tool out again, that we've seen a first wave high, second wave low, third impulsive wave. Looked very impulsive, right? Ran into these areas of market geometry of those different angles that I've shown, and then we expected a fourth wave decline, and I must, in my analysis, see another move to the upside. That would still be a very bullish sort of behavior. Whether we get there or not, we'll have to see. Now, that being said, I've also said this last week and this week as well during Monday's and Wednesday session that hopefully we don't see something like what happened over here, i.e. this area here behaving similar to what happened over here. Oops. And we'll only know that if price continuously moves sharply to the downside. Now, the first sort of, how can I say, words escaping my mouth now, is that scenario might play out is if price breaks the 3,950 level, which is the first high that I'm labeled here, i.e. 1, a 2, a 3. If this is a fourth wave, it either completed or we still need to see a zigzag. There's been a bit strong decline, in my opinion, to just say that the fourth wave is over. But again, anything to do with inflation these days, we might just see a strong reversal to the upside. Ideally, I want to see some sort of zigzag behavior lower. If this is a fourth wave correction, assuming that this was a third wave high, then your fourth wave is not allowed to move into the area of where your first wave completed, if that makes sense. So either complete it now and we see another move to the upside. Price continues lower from here and breaks this level here, then we have to start assuming that we might see a much deeper decline. And that might even lead to some really nasty, impulsive downward movement like we've seen previously during this move to the downside. Right, so my assumption is, before I entertain that idea, is that we're potentially going to make another high. If we move to a smaller time frame, like the 4-hour, just give that a few seconds to load. By the way, if you're new here, these red lines and also these green lines are the MACD divergences indicator that we use here. Very nifty little tool here at Ninjacators, but for me makes a lot of sense to view instances where you might have bearish divergence or bullish divergence, depending on what time frame you're obviously looking at. But it needs to happen, in my opinion, at areas of market geometry. Otherwise, you might just get instances where prices moves higher, continuously diverts, and then eventually you get a decline. Right, but before we get into the momentum divergence too much, similar thing here, obviously, potential one, ABC. It looks like a beautiful ABC move, and that potentially being a third wave. This decline here is very strong. And you would rather want to see or assume that you want to see some sort of behavior like this and then get that other move to the upside. It might just break this potential third wave high or move even higher than that. But if a fourth wave is going to complete, it might well have completed already. Although, again, I'm just worried that there's been a pretty strong decline. On a much smaller scale, this could potentially have been an A wave, like I said, potential B wave now, and then a C wave to the downside. Again, if this is a fourth wave decline, we should not see price move into 3,950. Otherwise, it invalidates this idea, and we might have to shift our bias to the bearish side. Okay. So, not really much to say here from a target perspective. We kind of stuck in between this support zone and that resistance zone on the upside there, and it really depends on how things might react to the Powell speech a little bit later on. I think, what, hour and a half's time from now. So we might only have real good clarity by the close of today of whether we're on the right track here. Are we going to see another wave up? That'd be nice. If we do, then we might expect a decline still. Corrective move, which might lead to a very nice swing trade back to the upside. We might even trade this down to the downside as a counter trend type of move, if that makes sense. Another thing quickly, before I switch to the NQ, quite often you want to take a high to a high using the sequences of the wave counts that are given here, and assume that your fourth wave could potentially end at the end of a channel, for example. Again, assuming this, might have been a 1, a 2, a 3, a 4 that either completed or might give us a high move to the upside and then a down move to the upside, or down move to the downside. Not much space here to the downside. Quite often, if you're dealing with single zigzags, which is the most common corrective move that you get, then your first wave, or let's say if you get an A, and let's say you get a B, and then we get a C wave to the downside, typically travels the same distance as your A wave. Typically, all right? Not always, but typically. For that to happen, the ES would have to bounce pretty strongly to the upside, retrace a lot of this decline that we've seen over here, if that makes sense. But from a resistance perspective, to the upside, these are levels we'll have to watch. Again, I'm not going to trade anything today because I want to see what happens during a speech and after, and how things close by the end of the day. Then upside resistance. And this is on a 4-hour, and since prices or these angles are sloping to the upside, for each bar, it will get higher and higher. But currently, right at the center channel line, resistance potentially 4,232 and a quarter. Higher than that, we're seeing the same level from a long-term pitchfork I've shown you, which slightly slopes to the upside from where we had this resistance to the downside, residing at, give or take, 4,282. Okay. We look at our fib retracements, assuming that this potentially might be a B wave. We have the 61.8, slightly higher than this center line over here, and the 78.6 retracement right at that upper level, around about 4,282. Again, we might just shoot up straight from here. Okay. Which is why I'm not going to read too much into things. I'm still hopeful that we get this one little pop up to the upside. It'll be really cool and strengthen my case that we potentially already bottomed in June, and that price might head back up to new highs. Potentially this year, next year, whatever the case might be. But like I said, line in the sand, 3,950. Break below there, and I think we'll probably pull, or actually potentially even break these lows that were set in June. Right, so that concludes the ES. Let's have a look at the NQ. Let's first go to the daily. Again, let's quickly get rid of these MACD divergences. Yeah, similar thing. We had a confluence of multiple market geometry lines from different angles coming together right here at the same time that the ES bottomed. Here too, I had a pitchfork that sloped down to the downside, or the NQ actually started its decline earlier last year than it did in the ES. Again, confluence, upward sloping line, downward sloping line, reversal to the upside. Similar price structure here. We had to go to, oops, We're lagging again here, which is really irritating. Let's give that a little minute to think. And it only happens with the NQ for some funny reason. Anyway, what was I going to say? Let's quickly have a look at a volume profile. A little bit to load. High volume node, point of control, around about 14,000 level, give or take. Still high up. We've got the same sequence here than we have in the ES. Whereby, I'll have to take that snap mode off again. Potential first wave high. This was potentially a running flat for a B. Third, and now a fourth that either completed, and we're potentially going to see another fifth wave to the upside. Again, that sequence not complete yet. But if we do see it, then guys, we might get a deeper decline. But that would set the stage of a beautiful 5-wave incline that could potentially lead to much higher prices at a later stage. Okay. So this area of support on the NQ lies around about 12,743/4, 12,915.5. We had a move into there. We identified that previously, and we've seen a reaction. Not only that, but we've also seen price test a median line, pretty much to the T. Formed these two little, like almost doji looking candles, and has moved straight back to the upside. I won't say straight back, retraced what, about a quarter of this recent drop that we've seen. Okay, so similar thing here. I would like to see another move to the upside, and then expect a decline, and then potentially a big swing trade back to the upside. Now, that's the expectation. Whether that works out or not, again, same thing. We've got a line in the sand here. If this was a third wave high, we might have seen an A B forming a C that's going to complete shallow with maybe even in line with this one, or running flat similar to what we've seen over here, and then a move to the upside. A break below these levels, the strong decline below 12,262 would invalidate the idea that we're busy with fourth wave correction. Okay. Not much to say really in the NQ. Again, stuck between a support and a resistance zone. What I did not do on the ES is if price were to, let's say this was an A and we're seeing a B. Let's go to the 4-hour. And here we can see is a typical thing I want to see on the divergences. Bearish divergence right at beautiful market geometry line when the decline happened. Well, actually, this one's not right because, and this is only happening on the NQ for some reason. This line should be down here. This is like mega what we call market geometry time frame displacement. If you switch between time frames, you can have your lines move up and down. The problem is that on the NQ, I don't know why it's doing that. But anyway, we've had divergences. It's nicely picked up here on the 4-hour on the MACD automatic divergence indicator, bearish divergence, and as well as a little bit of bullish divergence at these recent lows. Again, same thing that I said on the ES. Looks like a bit of a too strong decline in my liking. Potentially a 5-wave sequence already completed here. You'll expect some sort of zigzag behavior like we've had here, ABCs, or ABCs, or ABCX, ABC double zigzag sort of behavior. We haven't seen that. Very strong decline, which makes me lead to think that could move up again, get another test, and then move higher. Again, before I move now to crude oil, don't want to see 12,262 broken to the downside. If that is, or that does occur, then that invalidates the idea that this was a third wave high and that we potentially, similar to the ES, seen this behavior. Hopefully not, huh? Because that will be a bit bad, in my opinion. I think we'll get an extremely strong drop to the downside. So again, I'm not entertaining that idea too much, but it is in the back of my head. Just very strong decline currently. It makes me think we're potentially going to bounce, come down again. Then these support levels need to hold. Might move a little bit lower, but again, should not enter 12,226. Okay, again, let's keep a close eye on what happens today, and potentially have a better idea by end of today's trading sessions when the markets close, and by Monday when the markets open again, where we stand. Hopefully we've seen some strong directional move to the upside. I'm wrong about this ABC thing, and then the move, and then whatever. Hopefully we just get a nice strong bounce to the upside. Well, that's my hope. What the market does and what I hope is obviously two completely different things. Okay, let's go to crude oil. What time is it now? 10 minutes to. Let's give that a little bit of time to load. Hide these divergences quickly. Okay. I'm going to be dead on as saying crude oil got no clue what's going on here. Although my bias is that we could potentially still head lower. And I still want to see, especially when price came so close to actually breaking these lows in April. And these markers have now moved because we switched contract from September to, let's just get that back on, bear with me. Because we've switched from the September contract to the October contract. So these have changed. Very close to each other. Price nearly breached that. And this was, when was this? A couple of weeks back. Or a week back. We should actually go to the daily time frame. So I keep things in order. Or I get too ahead of myself. Let's just get rid of those MACD divergences. Any case. These lines to the upsides were channels that I've drawn and had on my charts for a very long time. So they've been working or acting as support and resistance really well for, I mean, an immensely long period of time, for a year or so. So I'm thinking price can break down below this angular support level. It's had support here, broke it. I thought that's when we were going to take out these lows. It didn't, and it pulled back up again. Messy, messy, messy. Look, up and down, up and down, up and down, up and down, up and down. Potentially not the best swing trading sort of environment. Probably better for those guys that trade intraday, in my opinion. Because good luck trying to figure out what all this mess is. I will tell you that I still think that there is a potential that will reach 84.48, 83.65, which was April and May's lows. No, sorry, March's lows. If we do break below these levels and we clear this level over here, which is this angular support, then I think we're going to hit these levels. But now it's just sort of hanging here and not reach any market geometry areas. I like trading from a market geometry area. That was a good example when we recently watched, and this was when was this? September. Oh, September. July, sorry. That price pulled right back into a line. Again, these lines were on my chart previously. I didn't do this after the fact, and we had a rejection. Now it's just not anyway. It's just hanging here. So we'll have to see certain levels breached to the upside. If price breaks the 97.87 level, then something else is going on here. And something I've mentioned, but I don't want to get too far ahead of myself, is quite often, let's get rid of the snap mode again. Potentially, we're seeing an incomplete C wave to the downside that might lead to new highs. That's obviously not what we want to see because everything's so bloody expensive at the moment. Gas prices, filling up your tank, food prices, everything gets affected by the price of crude as well, right? So, but there's also been no evidence that we potentially in the midst of some sort of third impulsive wave to the downside. Unless price starts really getting going down here, and all of what we're seeing here during this move is some sort of leading diagonal, which it could be. That being said, we break the 97.87 level and head much higher. And since price didn't break these lows over here, then I think there is a possibility that this price behavior calls for a potential triangular corrective move. It might look like this. It might be an ascending or symmetrical. And this is quite, I'm going to say, characteristics of a triangle quite often is when you see prices get very close to previous highs in this instance, but fails to break it. Gets very close to previous lows, fails to break it. Okay. So sort of some behavior that could occur and might be the initial phases of a triangle. But again, hopefully things, and if that happens, then, you know, that might mean that prices will eventually lead higher, but much later, because this triangle could take ages to complete. We're looking at the daily time frame, remind you. Okay. So as long as price stays below the 97.87 level, still in a sort of near-term bearish on crude, but it would need to break. Let's rather use a zone here. This sort of area over here. Need a nice clean break, potentially close on the daily below those levels, the lower side. Then I think we have a very good chance of hitting these previous lows, maybe even accelerate lower towards this lower median line, where that's typically where prices like to find support in downward moves or resistance in upward moves. Okay. And this line over here, that lies currently at 79.81, around about 80, plus minus, right? Okay. Nathan, thanks, Richard. Great analysis. You're more than welcome, Nathan. So yeah, let's quickly mark out that zone. So if you want to relook at this video later on, then you're more than welcome to maybe go label these things on your chart. 90.22, give or take, towards the lower end. 88.52. I won't say this is a support zone or a resistance zone or whatever the case might be. Sorry, in this case, support zone. I'm just saying from a market juncture perspective, I need to see price break below here rather than breaking above. And then that will still have my bearish bias intact. Okay. Let me just take a quick sip of water. Guys, I'm also streaming live on YouTube. So if you've got any questions and you're visiting us from the YouTube side, then please do ask that. I see Danshell did type something, but I don't think he completed this message. You're more than welcome to chat with me on that side as well. All right, guys, let's move on to gold, and then we'll conclude today's session. Actually, this is a very great example of divergences. One of the indicators I like to see divergence, a slowdown in momentum at areas of market geometry, which is what happened here when price reached this lower median line with divergence, and we had a strong move to the upside. We've been tracking this move to the upside. We identified a potential resistance zone. There wasn't much from a market geometry perspective at this area. Price easily cleared this resistance line over here, but all it really did was pull into where these previous lows occurred. Low, low, low support, break, support, classic technical analysis 101, pull back into previous support that now turned to resistance and strong decline to the downside. Gold might have quite an effect if people take, or investors take, Powell's comments as being more hawkish. which would just probably see the dollar index continue skyrocketing to the upside, and then gold might just collapse lower. Same thing here that we're seeing gold. Very strong declines. I'm going to go to 4-hour quickly. And this is typically how I track corrections. You'll see this over and over. Track this correction. Well, I thought it was a correction. It pulled a little bit too deep in for my liking. But anyway, strong movement to the downside. This does look impulsive, doesn't it? Potentially means that 1, 2, 3, maybe we've seen a 4, and now we're going to see a 5th wave. That will be extremely bearish, in my opinion. Then have a corrective move to the upside, followed by even a larger move to the downside. That being said, when it comes to economic conditions these days, anything to do with inflation, how people perceive whatever the Fed says or whatever the case might be, you might see sharp declines like this and boom, back to the upside. So this might have been the end of a correction, and look where price reacted from at the lower median line of a pitchfork. We will see this over and over and over again. So price heading back up above the 1778 level, breaking or breaching the 1794 level, in my opinion, would probably set us up for the next larger move to the upside. Although, again, I'm going to reserve judgment here until next week, until after the Jackson Hole Symposium is concluded and whatever Powell had to say for himself. All right, so on gold, the only thing that's a little bit unclear here, this looked like to 1, an A, a B, ending diagonal C for a 2, and then this is what worried me. Did we see a 3rd wave here? Is this a 4th wave? It can't be, because then it pulled back into the area of the 1st wave. That's why I'm a bit worried about the price action in gold. So this can't be a 4th wave. Unless somehow this was the initial impulse to the upside for 1. We're in the midst, close to ending at 2. And then we're going to see one hell of a move to the upside. But like I said, I'm worried about the strong decline. Very, very strong decline. So in the bigger picture, before we conclude today's session, let's go back to the daily. It might be that, and I'm still assuming that this is some sort of larger degree 4th wave correction that is not over yet, and we might still even move lower. Again, we'll have a better idea potentially, hopefully, by the end of today or by next week, Monday or Wednesday. Right, guys, you got any questions? Then you're more than happy to ask. We've got a question from Jason Taylor on the YouTube side. He's asking, is that the supply and demand indicator? Jason, the ones with these zones are ones I identified myself. We do have a supply and demand indicator. A paid version at Ninjacators. We've also got a free version, which does a pretty good job to determine previous areas of volume imbalance. And I don't know if you belong to the free indicator of the month club. It's free to sign up, and you can get 1 free indicator per month, as well as some access to future discounts and so forth, or webinars or whatever case we might have. So I do have a supply and demand indicator, but I did not show that off today. One of the reasons being is that, you know, I'm sort of a bit neutral today. I want to see what happens after today with the economic news event when Powell speaks. But just for you quickly, maybe I can just punch it in there for you. I do have it somewhere. That link, if you would like to join the free indicator in the month club that we have here at Ninjacators. I'll drop it here in the box for you, and Jason, then you can go check that out. There we go. Just go visit that link, Jason, and then that should sort you out. There is a free version of that indicator if you so wish to check it out. All right, I'll quickly drop it here in Zoom as well, and then we'll call it a day. And I'll be back on Monday then, guys. Hope you have a fantastic rest of your weekend. I hope you enjoy the analysis. And yes, always take care of yourself. And I'll be back next week. Until then, take care and goodbye.